Stocks on the decline today, snapping a 5-day winning streak. For the details, let's go to Deborah Kostroun at the New York Stock Exchange. Deborah.
Well, thanks a lot, Pimm. You know, I guess Christmas is over, and so is that Santa Claus rally, but we can blame this one on Europe. Once again, the European Central Bank reported overnight deposits hitting another record. That means that those banks are less willing to take the risk of making short-term loans to each other. Instead, they would rather earn low interest rates from the ECB, and that is just the latest indication of more worry among the European banks. So one of the reasons that we did see all those red arrows on the screen, Pimm.
Now, Deborah, we also had some news out of Europe. Good news, those Italian government bond auctions, lower cost.
Right, exactly. So those were perceived as very successful because Italy was able to pay much lower borrowing rates than they did at auctions just last month. And that strong demand from investors really raised a lot of hopes that maybe Italy is going to be able to avoid the extent of the crisis that was reached in Greece and Portugal. But it looks like the news of the ECB and those lending to the banks was a bigger story than the Italian government debt issuing or the bonds. And with all that concern about the economy, not surprising that we saw material stocks and also energy stocks among some of the biggest losers on the day. In fact, all 10 industry groups in the S&P 500 were lower. And in fact, we also saw crude oil down about $2 a barrel, getting below $100 a barrel. And once again, Pimm, below average volume, not a ton of participation here in these last few trading days of the year. Back to you, Pimm.
Thank you very much, Deborah Kostroun, reporting from the New York Stock Exchange.